imagine Tether is a complete fabrication and they are, counterfeiting tethers. In a world where they know they're going to be cracked down upon, arrest warrants are coming, they would be more than motivated to trade Tether for Bitcoin at any price in tethers. And so you could easily see the price of Bitcoin moon to 500,000 quote dollars over a period of a few days, and until the Tether situation is resolved.
Now, I thought the best place to start this conversation would actually be looking at Operation Choke Point 2.0. Most people are familiar with the United States government's recent attack on Bitcoin and many of the other associated crypto banks in the space. You've written a number of great pieces on this. I would love to just get your 40,000-foot view of what is currently going on with Operation Choke Point 2.0. Do you see more attacks coming on the horizon, or do you think we passed the worst of it?
I would say we still got a lot more to go. I think unresolved issues include probably Binance and Tether, and then there's obviously this ongoing and high-profile back and forth between Brian Armstrong of CoinBeast and the SEC and Gary Gensler, which is amazing to watch, from a distance. We've written, it's funny because most sort of Bitcoin enthusiasts would consider us to be on the more skeptical side, and most of the Bitcoin/crypto skeptics would think that we're foolish for acknowledging that Operation Choke Point 2.0 is even a thing. I mean, I think it is almost certainly a thing. And we've written several pieces pointing out that while we think a lot of crypto, ex-Bitcoin, is certainly replete with fraud, that doesn't mean that the tactics being used are things that the rest of us necessarily should be comfortable with. And we wrote a piece in March called Pandora's Precedent, where we opened a piece talking about how the government cracked down on online poker back in the mid-2000s. And, I had a very good friend who was negatively impacted, really hadn't done anything wrong, but basically had his life destroyed because the government wanted to set some examples. And we've taken some of those precedents and, certain things that we used to get outraged pretty quickly over, like debanking certain industries because they're out of political favor. And we've just accepted now that this is a tactic that we should acknowledge exists and be fine with. And we don't think that should be the case. And in fact, we wrote, I think, one of our more popular pieces this year, talking about how those very same tactics of Operation Choke Point 2.0 could be used against gold holders if the time comes. And I believe that was called Golden Handcuffs, not golden, but gold space IN, golden handcuffs. And we showed in that piece how all of the same propaganda being used to crack down on crypto could very easily be spun and used against gold holders. And I think it's odd for people to assume that we could acknowledge that Bitcoin is regulated as an asset in the US and perfectly legal to own, that crypto is pretty much replete with fraud, although there is some interesting things going on in the DeFi space. And there's certainly some interesting technologies. We could also acknowledge that the government was always going to crack down on the vast majority of this stuff, but also at the same time question the tactics being used. I don't think there's any sort of intellectual contradiction in our stance, but in the high dopamine, low attention span era, I think people project certain assumptions upon us and anyone else who's sort of reasonably high profile in the content creation space, and then react accordingly.
Yeah, I couldn't agree more. You've already answered a number of my questions with that response. I was going to ask you about the differentiation between Bitcoin and crypto, because our view on this channel as well is, Bitcoin is the only thing that is actually decentralized and we think can probably withstand a nation state level attack if it does come. Everything in crypto, I think it's all centralized. It lapses as being as decentralized, and even DeFi. I'm pretty very skeptical on DeFi. But I wanted you guys.
Let's dig into that. Yeah, I mean, I think that's an important distinction to maybe drill down on. I mean, our view has always been the government's not going to put up with most of this stuff, right? That's like if you look at the earliest pieces of Doomberg, long before the energy crisis came and we kind of blew up. Like 2/3 of our pieces were on how we marveled at what was going on in crypto. Like we can't withdraw $10,000 out of our own personal bank accounts for money that we've already earned and paid taxes on, without getting a suspicious activity report sent to the US Treasury. But you could fling around millions, tens of millions, billions of dollars in the crypto space, at least notional value, without nary an oversight. And we always just assumed from the beginning, right or wrong, that the US would crack down. And the reason why we've always held Bitcoin separate, perhaps is for different reasons than you, which is it is basically already adjudicated in the US as being an asset, i.e. decentralized. There's a legal framework that exists both from a sort of procurement of the asset and then the taxes consequences of transacting with it. Many Bitcoin holders that we know, are totally up and on the up and ups with their taxes with the IRS, for example. And so when we were predicting from the early days it would be a sort of a crypto crackdown, that one of our main reason for differentiating the two is, I mean, if you have an exchange that is offering crypto and other securities, then of course that exchange might be in jeopardy. But there are rules for how assets can be traded. The commodity futures exchange, whatever, I forget what it's called, CTFC. They have a lot of oversight on how commodities are traded in futures and so on. And so you could buy a Bitcoin futures contract, very importantly, denominated in US dollars, of course, not in Bitcoin itself. But so like there exists a legal framework for Bitcoin that does not exist for every other cryptocurrency. And so for that reason, like regardless of network effects or, like whether or not a nation state could take it down, that's never really been a consideration for us. It's just a pure, is the US government going to crack down on this? Does a legal framework exist for it? Analysis. So I would argue that almost every other crypto is an unregistered security. And I think that's what the SEC has argued. Many will disagree with us on this case, but like this is an example where we and Michael Saylor agree completely. It's just, that's the way we would differentiate the two. One has been adjudicated. Like these are the rules of the road. Now they might change those rules, but as it exists today, Bitcoin is among the cryptocurrencies the only one that really has a full runway. There's some, Ethereum, Ether, sorry, there's some argument because the CTFC says it's also an asset where the SEC says it's security. But aside from those two, everything else is, in my mind, a security until proven otherwise.
Yeah, I could not agree more. Crypto, I mean, Gary Gensler's been pretty clear. I was actually not going to ask you about the Michael Saylor debate, but for anyone who's not aware, you did a great kind of back and forwards with Michael Saylor with a good friend of mine, George Gammon. I think it was in 2022. What are your thoughts on MicroStrategy these days? And how have your thoughts evolved around MicroStrategy trying to be a Bitcoin ETF?
Well, it's not really a Bitcoin ETF for a variety of reasons, because it wouldn't be regulated as such, right? So we've been skeptical of the strategy, not of the legality of it. I think he has fully disclosed all that he is doing, and he has taken a publicly traded company that generates some revenue and has decided to run a treasury in which he not only uses the profits from that company, but its existing cash. And then we think that the foolhardy decision was levering up, taking out hard dollar liabilities and putting it in Bitcoin, which is just a volatile asset. You might think it's going to $1 million, but it could go, to far below his purchase price for a very long time before it reaches $1 million. And in that intervening period, he either has to roll those loans, those bonds, like refinance that debt, or sell a bunch of equity to pay off that debt and therefore dilute existing shareholders. And so it is a sort of a trading vehicle that has some correlation to the price of Bitcoin. And in that sense, again, like all the SEC really cares about, and Michael Saylor has been careful to do this, is that you have full and accurate and transparent disclosure so that well-informed investors can make intelligent decisions based on facts and data. And so while we think it is foolhardy for him to do what he has done, and we didn't really have, so I was more interested in pitting him down on custody, because I do think the SEC has some pretty serious questions about who your custodians are and whether they are properly registered with the SEC, and whether, MicroStrategy's Bitcoin assets might be entangled in a bankruptcy. We've written about many of the bankruptcies as well. There's many precedents to be set in these bankruptcies. And one of the things we're learning, is that attorneys and consultants are going to get a lot of value. And, just because, like, if you take FTX, like you may have been sitting in, you might not have had any trades on and had all your assets just sitting in some cryptocurrency. Well, now you're just an unsecured creditor in the back of the line with everybody else. And so my main risk, like I would say that the one critique that I would have of MicroStrategy, and the one thing that I tried to drill him down on in the interview, and I think I annoyed him a little bit with the line of questioning that I went down, was around just how the custody of MicroStrategy's Bitcoin works. Because really, if you're going to be a levered bet on Bitcoin, I think there probably could be a bit more disclosure. Who are your custodians? And is there any, and I happen to have had a pretty good insight into who his custodians were, and he wouldn't go into the names. And I knew for a fact that one of them, or I had very strong suspicion that one of his custodians had extended an awful lot of leverage to Bitcoin miners, and now those loans were turning sour. And could he have yanked his Bitcoin out of there before a bankruptcy filing? And even if he did, could that have been subject to a conveyance, a look back conveyance in bankruptcy court? I happen to have a fair bit of experience with bankruptcy from an investing perspective, and boy, all you really need is one judge to make some case law, and you could be in a real bad spot. And so our view on MicroStrategy is mostly he is disclosing what he's doing. All of it is perfectly legal. There's a lot of risk to what he's doing. We would never do it, and he sort of crossed the Rubicon by taking leverage to accelerate his bet on Bitcoin. And that's sort of where we are with MicroStrategy.
He certainly has crossed the Rubicon. I want to ask you about an article you wrote. I think it was Crossing the Rubicon. And I think if my memory serves me correctly, we were talking about central bank digital currencies and things in that nature of, Operation Choke Point 2.0. I would love for you to let the listeners know how you thought of even coining that phrase, crossing the Rubicon, and briefly explain what that is.
Yeah, so when we write a piece, the very first thing we do is ponder a great title, because then the piece kind of eventually writes itself. The piece you're referencing, I believe, was published in late December of 2022. And really, it was a call to action for people to see what was coming. Our good friend Ben Hunt writes this a really amazing analogy in a piece called "In Praise of Bitcoin!" If you want to Google that and read it, it's really great. Where basically he describes the U.S. Treasury Department as the Eye of Sauron, and their objective is to see every single transaction in the economy. Get rid of cash and get rid of intermediaries, and basically just be the Eye of Sauron, from the movie. And we think central bank digital currencies are a serious threat to freedom, and they should be opposed. In a world where the U.S. government can see everything you're doing, it's a very, very short step to the desire to control what you're doing. And I tell a story recently on a different podcast where this is a bit of a long story, but I think it's worth telling because it's pretty insightful. In my state, the state liquor commission, let's say, has been cracking down on retailers who sell beer to make sure that they're documenting properly that they're not selling beer to minors, which who could be against that, right? But they're not really cracking down on selling beer to minors. They're cracking down on the documentation. And so many of the larger retailers have just self-imposed a requirement that every sale of a case of beer needs to have a valid driver's license. I was, I just bought a car and was getting title and plate, and the nice woman at the DMV noticed that my license was expiring soon and asked me if I wanted to just take care of that. And I said, sure. And so she took my picture and printed out a piece of paper and stapled this piece of paper to my license and said, if a cop pulls you over, you can just use this, right? Well, unfortunately for me, she stapled it through the magnetic strip on the back of my license. And you can imagine what happened when I went to my local grocery store and had a case of beer amongst my groceries. Since it wouldn't scan in, I couldn't buy the beer. I'm closer to 70 than I am 21. But this is a very small story, but it's on that path of like insanity. Like I'm clearly over 21, but we've created this system of control where if my card doesn't properly swipe through this machine, there was no mechanism because they just had zero tolerance at their store for like, we have to document every sale of liquor, and every sale of liquor is documented in this way. And my card wasn't working for that documentation scheme. Well, that feels on the path of, I see you've bought 2 cases of beer in the last week, Doomberg, but do you really need that third? Oh, I see you've taken 2 flights in the past month. You've exceeded your carbon footprint. And don't think for a second that once CBDCs are prevalent that the climate alarmists won't be advocating for cramping down on people's carbon footprint indirectly by controlling what they buy. I mean, this is coming, and anybody who doesn't think it's coming and anybody who doesn't think that's the purpose is, I just think, dangerously naive.
Now, I wanted to quickly interrupt today's chat to let you know about our amazing show sponsors. If you are in the market looking to purchase a little bit more insurance on the fiat legacy financial system, I would love to point you towards Swan Bitcoin. They're a great Bitcoin-only educational company, and they will also help you buy Bitcoin easily, and they're going to give you $10 of free Bitcoin if you sign up using the link in the description of today's video. We're thrilled to be partnering up with Swan Bitcoin. They're a great company, so definitely check them out. If you need help putting your own Bitcoin into your own self-custody, you can hit us up at CoinBeast Connect. We are a Bitcoin-only educational company, and we specialize in helping people who are having any sort of Bitcoin technical difficulty. Again, links to all the show sponsors are in the description of today's video. Let's get back into this discussion.
Yeah, I was just going to say, it's funny you bring up that example of your license. I notice a lot of those very strict kind of guidelines and rules here in Latin America. Just last week, I was at the local gym in Colombia, and I've been going there for 3 months straight every single day. So they know me, they know my partner, we train there every day. But you actually have to show them your thumbprint to get into the gym, and the machine wasn't working the other day. So, you know, most people in America would just say, okay, you know, we know you have a membership here. We can see you on our system. We have a photo of your face on our system. Just, you know, climb over the carousel and just go train. But no, here in Colombia, they have to follow the rules exactly. And I think the machine was down for like 25 minutes, and there was a big lineup of like 30 to 40 individuals wanted to go and train at the gym. But, you know, the people were just like, no, I have to follow the rules. This is the system. I cannot let anyone in until the little thumbprint thing kind of, you know, it shows us that you are a member here. And it's just that kind of incompetence and even self-censorship online. It is trending in a very scary way. So
well,
I'd
to circle it back to Operation Choke Point 2.0, right? I mean, payment processors controversially have started to limit the ability to for law-abiding citizens to procure a firearm, whatever your views are on gun control. I mean, in the U.S., there's a Second Amendment that protects that right. But, you know, activists have been pressuring the payment processors like Visa and MasterCard and other payment processors to limit payments to, you know, pick your favorite politically unfavored industry, sex trade workers, or, you know, maybe content producers who happen to be right of center might come into focus. I mean, who knows, right? And so once you go down this road, you know, the time to stop it is before it gets out of the barn. And you know, it is, I think it's a real, yeah, it was probably, look, it's probably gone too far. And if they want to do it, they'll do it. And Lord knows, you know, we're not going to be able to do anything about it. But, you know, there's no doubt in our mind that as the government propagandists get ready for the rollout of CBDCs, they will undoubtedly label opponents of it as, you know, conspiracy theorists, as though fighting for personal freedom and against government encroachment makes you a crackpot. And with that mindset, I do think that, you know, the strain of sort of individualism and freedom and liberty that proliferates the Bitcoin community will eventually make it a target of the US as well.
100% agree. I think the day is coming. That's actually one of the biggest reasons I left Australia in 2022. As soon as the international borders opened up, I think I was on the first flight out of there, just because of the way that the West, not just the US, but also most of Europe and Australia and New Zealand seem to be trending. Anybody who doesn't, you know, save 100% of their savings in fiat is just going to be labeled a domestic terrorist or some, you know, extremist. Like, how dare you want freedom, Doomberg? That's so extreme of you. And so it is very scary the way things are trending. What do you think our best options are to fight back against these CBDCs? Because I agree. I think that inevitably our central planners are going to try to enforce them. What do you think our best options are to kind of route around this wave of Orwellian madness that is approaching us?
I would say the only real tactic that you have is to engage in the political process. Because once it's upon us, it'll be impossible to unwind. And you know, once it's upon us, I will undoubtedly have to participate. Like I have children. You know, it's funny because I was on a gold-oriented podcast and we talked about how these tactics could be used to outlaw the private possession of gold, right? And the exact same propaganda, the piece we described earlier, golden handcuffs. And I just said, like, if the government outlaws gold, I would be turning in my gold because I'm a citizen of the US and I participate in the fiat dominated system, and I have family and children and peers and a good lifestyle that I'd like to protect. And I'm not going to die on the gold hill. Like it's a small allocation of my personal net worth, but if the government made it a felony to own it, I would be turning it in. And I got a lot of flack for that in the comments and on Twitter, and people still sort of, make fun of me for it, which is kind of weird. I call it sort of Twitter tough guy syndrome. I mean, if you want to break the law, go ahead. My argument is that you need to fight to prevent such laws getting on the books in the first place. But once they're on, you have a decision. Will you proactively break the law and risk your personal freedom, or will you acquiesce? And in the case of gold, if they made gold illegal to own privately, then I would be turning it in. I'm not ashamed to say it. And I think the vast majority of people listening who claim they wouldn't would end up having to do it, or would eventually do it, in my view.
Would you ever consider leaving the US? Like, do you have a line in the sand where you say, okay, enough's enough. If X happens or if Y happens, that's it, I'm out. I would move to somewhere that a country that might want to actually promote freedom.
I personally wouldn't. I mean, I'd be hard pressed to imagine a scenario where uplifting my roots and my friends and my family and my children and their future would be, I would probably just sort of make a last stand in my castle before I would leave. I understand that there are people of perhaps with far more wealth than me for whom it might be reasonable to get a second or third passport, but I'm more optimistic on the future of the country. I do believe that the U.S. will regress to the mean, and things will be mostly okay. The name Doomberg notwithstanding, I don't know. That's why I would say, the best tactic, the only tactic, is to proactively participate today in the political process, as opposed to trying to insulate yourself from the power of the government. That's just not going to happen. And frankly, attempting to do so too thoroughly will get you on all the wrong lists anyway.
Yeah, I'm probably on a few of those lists if I do have to admit it, Doomberg.
Yeah.
But I've got a couple more questions left on Operation Choke Point 2.0. I've personally been surprised at how the price of Bitcoin has reacted over the past 6 months throughout all of the attacks on Silvergate, Silicon Valley Bank, a lot of the other Bitcoin businesses being debanked in the industry. I've been surprised to watch Bitcoin rally from $15 odd to $31,000 or so, where it peaked out last month. Have you been surprised by how Bitcoin's reacted? And do you think that if the waves of attack continue to come, it will eventually potentially hurt Bitcoin's price in the short term? I know we don't do price predictions here, or it's not something either of us want to engage in, but have you been surprised by how Bitcoin's reacted?
Not really. Again, I catch flack because I think Peter McCormick once asked me, do you own any Bitcoin? And I said no. And he said, at what price would you consider buying Bitcoin? I said, well, I mean, if it fell to 5,000, I might allocate a % or 2 of my portfolio to Bitcoin. And then again, the sort of the Bitcoin troll army, which is a weird phenomenon, by the way. Like, it doesn't do the Bitcoin community any good if your objective is to convert no coiners into hodlers to troll them on Twitter all the time. It's very off-putting and does a damage to the brand. But I digress. That it's gone from 15 to 30, for example, and I didn't buy it. It makes no difference to me. I mean, it's fine. I can have fun spending your gains. Now, to your question, this is where I'll probably turn off a few of your listeners, but I think that until the Tether situation is resolved, I don't, people quote the price of Bitcoin as being in US dollars. I prefer to think of it as, Bitcoin is trading for 26,000 tethers and change today. And until we have clarity into the black box that is Tether, I don't think that, that the market cap of Bitcoin on paper far exceeds the amount of US dollars floating in the ecosystem that you could get out of it if you wanted to convert back to fiat. Now, many Bitcoin holders will never want to do that. And people get annoyed when I say, oh, that's the same for gold. No, but like, gold is transacted in US dollars as the primary currency, and Bitcoin is transacted in stablecoins as the primary currency. And that's a very important difference, a distinction with a huge difference. And until stablecoins are regulated and Bitcoin is predominantly traded in true functional US dollar equivalents, I don't really think we can make many conclusions about the price. And in fact, let's just do a complete hypothetical. Imagine Tether is a complete fabrication and they are, counterfeiting tethers at will. I'm not accusing them of that. I'm just scoping out a hypothetical for you here. In a world where they know they're going to be cracked down upon, arrest warrants are coming, or pick your favorite, they would be more than motivated to trade Tether for Bitcoin at any price in Tethers. And so you could easily see the price of Bitcoin moon to 500,000 quote dollars over a period of a few days. And I would argue that would be pretty artificial. Now, having said that, there's an entire ecosystem of markets that do trade in US dollars and use the reference price of Bitcoin, and that is the futures market regulated by the CTFC. And those people could make a killing because you're ultimately making US dollar bets against each other with a reference price. Whereas if you were actually owning Bitcoin and wanted to get your fiat out at that price, it's a whole different matter. And not many people understand the nuances between the futures market and the sort of crypto markets. And we believe, of course, this is why Gary Gensler has steadfastly opposed the approval of any ETFs, and he specifically calls out Tether in those rejections. We wrote an entire piece on this to try to explain to people why futures are different and why you can get a ETF that uses Bitcoin futures to allow retail investors to get exposure to the price of Bitcoin, but actually a spot BTF that goes and buys Bitcoin is not going to be approved by the SEC anytime soon. And I know that's probably a lot of detail, but we've studied that aspect of the market pretty carefully.
Details what we want, Doomberg. It's why we got you on the podcast. No, I certainly do agree with you there on Tether. I know we don't quite see eye to eye on everything surrounding Bitcoin, but to describe Tether as a black box is probably a generous characterization. Tether has always been very opaque, and even me personally, I was a little bit dubious of whether they could or could not be inflating the price of Bitcoin by just printing tethers and pumping the price of Bitcoin. Something that's made me feel a little bit more at ease with the price of Bitcoin has been the rise of the more regulated version of a stable coin, which is the USDC, which I think they are supposed to be 100% backed by US government debt. And I think they're around $30 to $40 billion in market cap today. What are your thoughts on USDC and them trying to be a more regulated version of Tether?
Yeah, so to the extent that they have proven reserves fully backing their stablecoin, I think there's very little doubt, and we wrote to that effect. And in fact, they work with BlackRock, and it's pretty clear down to the QSIP number what they claim to own. However, what you're seeing right now, which is consistent with our model, is the quote unquote market cap of Tether is skyrocketing, and the market cap of Coin Circle, USDC, is collapsing. And in fact, it's under 29 billion now, as we speak. Stops on the train where you can actually exchange, cryptocurrency for hard fiat. I know hard fiat is a bit of an oxymoron, but if you're speaking from the regulated fiat world, there are US dollars to be had if you can get your hands on USDC tokens, and they are exchanging dollars for those tokens. You can't really do that at Tether unless you're one of their quote approved customers. And famously, Sam Bankman-Fried was the largest and had done allegedly 36 billion worth of transactions with them. But he's one of the few people to publicly claim that he has been able to redeem Tether for US dollars. I'm not aware that retail has ever successfully done that. And so in a world where there's a $30 billion pot of hard fiat to be had, and Operation Choke Point 2.0 is ongoing, and you're an institutional participant that might regret putting your foot in the water, and you just want to be done with the entire space, well, you sell whatever it is you have, you convert it into USDC, and you bring your chips up to Jeremy's exit there at the casino, and you get US dollars and you go home. And this is what we're seeing, like the jaws are open wide on the divergence between the alleged market cap of Tether and what we believe is a true market cap of USDC.
Yeah. I think that's a really interesting point you raised there about Sam Bankman-Fried. It actually just triggered a little bit of not an epiphany, but an idea for something for myself to explore later on, because he was obviously in bed is probably the wrong word, but he was funding lots of these political campaigns in the US. And just opening up the black box on Tether again, I find it interesting. Obviously, they haven't been audited by a very reputable firm, but they claim to be buying lots of US treasuries recently. And I wanted to ask you about a really cool tweet that I saw, I think it was a week ago, by Will Clementi. And he was kind of making the point, hey, Bitcoin has been correlated to the DXY, which is like the US dollar index, I suppose, measuring it against other fiat currencies. And he was making the case that whenever you see a strong DXY, you see a weak Bitcoin. And he was kind of saying, hey, yes, Tether just came out and recently announced they're putting 15% of their profits into Bitcoin every month. Could this potentially weaken the correlation that Bitcoin has with the DXY? So we could see a strong DXY and potentially not so much of a weak Bitcoin. So if we put on the hypothetical hats for a moment and we assume Tether is being transparent with their reserves, what do you think of this potential scenario?
Well, I just think, first of all, you can't really believe anything Tether says, in my personal opinion. And secondly, if they're putting, 15% of their quote profits, my big question is, like, they're operating on an $80-90 billion, level. That's huge, right? And if they're transacting in US dollars anywhere in the world, there's a correspondent bank somewhere that's based in the US that has to be aware of what's going on. And I can't imagine who that would be knee deep into Tether at this point, after watching what happened to Signature and Silvergate and even Silicon Valley Bank. So I don't know. Like, if we just take everything at face value, then 15% of their profit is not really actually a huge amount of money, because they're probably getting 4% yield on 80 billion. So you're talking about what? Let's say 3 billion, and 15% of that is 450 million. And so, 450 million in volume a year spread over Bitcoin is not really going to be too big of a thumb on the scale of the price of Bitcoin, in my opinion, based on the alleged volumes that we see transacting. So I don't really know that, again, if it was 15% of their reserves, then that would be a different story. But they're specifically saying 15% of their profit. And, at these interest rates, well, they're certainly, look, if you could get $80 billion of US fiat at zero interest indefinitely, that's a fantastic business. You just park it in T-bills and make risk-free money. Like, it's, slap a 6 times multiple on that, and that underlying business is worth $20 billion. If they're totally legit, hey, shame on me. There's a lot of things they do that would indicate, if they were totally legit, there'd be a lot of easy things they could do to prove that, and they proactively choose not to, which is just sort of gives everybody the red flags. But in the hypothetical you described, 15% of the profit is not really, on a trade volume basis, is not really going to make a huge amount of difference. Well, just do the back of the envelope, 450, that's basically $1 million a day, to the close approximation. And so assuming they have to have some like cash and all this other stuff. But yeah, $1 million a day is not going to move the Bitcoin market all that much, in my view. Certainly not going to change historical correlations.
Yeah, and that would assume that, the Fed keeps interest rates high, and we can certainly explore that a little bit later on in our chat. But I want to actually transition into talking about what you're most known for, and that is your amazing work on energy. You wrote one of the most thought-provoking articles that I think I've read in the past couple of years. I think it was titled something along the lines of Mission Impossible. And you're kind of actually running the maths and running the numbers on just how impossible it is going to be to actually 100% transition our economy from a fossil fuel-based economy into this kind of green utopia, renewable energy, everything economy that our central planners want to push us towards. So Doomberg, I would love to ask you, how did you even think about writing Mission Impossible, and what were some of the most mind-blowing figures and stats that you came across in your research for writing that piece that even surprised you?
Yeah, we wrote Mission Impossible, really focused on, if you have a constraint, you have to manage that constraint, really. And one huge constraint to the electrify everything agenda, there's many, and we've since written about grid and reliability and all these other things. But the sheer volume of battery materials, the metals that are needed for both storing that energy and even creating that energy, rare earth magnets, all of these things. The volume of cobalt and nickel and copper and lithium that are needed to get anywhere near the types of penetration that are, governments are mandating just simply doesn't exist and won't come online in time to make a meaningful dent in that demand. And so therefore it won't happen. And in particular, the exact same environmentalists who are demanding that we electrify everything are the very same people opposing the permitting of every new mine that comes down to meet that demand. And then the countries that are currently supplying those metals are saying, wait a minute, we need a bigger share of this value to ourselves, and they're ripping up contracts and they're nationalizing mines. And so it's something like a 25 to 40-fold increase needed depending on the metal that you need. And it's just not going to happen like in any reasonable time frame. You could just look at the pipelines of new mines and just realize that it's not going to happen. So then we get this question sometimes like, well, why is the price of nickel down, or why is the price of copper down? Because people don't believe those demand projections. So like if you don't have enough nickel to make the batteries, then you don't need all the other things that go in those batteries either. And the market has a funny way of sniffing that stuff out. And so we don't believe that a meaningful electrification of transportation will occur on the time frames that people believe it will. And we're still, we are making two radical errors in our partitioning of those limited materials. So one of our phrases around here is if you have a constraint, you have to manage to it. And the classic example we use is, battery electric vehicles versus plug-in hybrids. If you have a 80 kilowatt hour battery that abates Luke's total fossil fuel or gasoline consumption, I should say, because fossil fuels are still being used to recharge that battery. Or you could divide that battery into 4 and abate 80% of 4 drivers' batteries, fossil fuel, or gasoline consumption. Sorry, I'm tossing around a lot of terms here. 4 times 80 is 320, which is 3.2 times bigger than 1. And so, that same battery, that same 80 kilowatt hours worth of batteries could be used spread across 4 drivers far more effectively if your true ambition is minimize the amount of gasoline burned in distributed vehicles. And so, just that simple policy tweak would go a long way to achieving the stated goal. But instead, all gasoline consumption is bad, and therefore we should go 100% to BEV when it's literally impossible. And, I've seen Elon Musk make outrageous statements about how, converting to a full electric economy will result in less mining, which is just, silly beyond words. But no need to open that can of worms. But it just insane. Clearly, I have a fair amount of experience in mining. It's just not going to happen.
Insane is a nice way to put it. I will definitely be linking to your article, Gold in Handcuffs, that we've mentioned a couple of times, as well as Mission Impossible down below. There's some of the best reads that I have come across, and I could ask you questions about the energy space for hours and hours on end, but I want to be respectful of your time and wrap up with a couple of questions that I think I haven't heard you address in many different interviews or podcasts. I always like to ask different questions, and I want to focus on the future of social media. So firstly, congratulations. You've written probably one of the most successful Substack newsletters. I think it is the most successful finance Substack in the space. So what are some of the key lessons that you've learned from that experience, and what are some tips and tricks for maybe somebody who's trying to build out an email list?
Yeah, great question. If you just think about the customer journey for a content creator, it's impression to engagement to email to paid. And we kind of view the customer journey as sort of sliding down our gold sluice box, right? And so impressions are the pay dirt, and engagements might be sort of more concentrated pay dirt, and then emails are, with gold mixed with black sand, let's say, and then you put it through the washer, the jig at the end, and you end up with pure gold, which is a paid customer. And as long as you're filling the front end of your sluice box with enough pay dirt, and then you have a pretty efficient means to wash away the dirt and capture the gold, then at the end of the week you pull up your mats and you see how much gold you've made. And it's pretty much that simple. Easier to say than to execute in practice. We always say, like, very first thing is it has to be a true passion, because the amount of work that goes into it is huge. The barrier to entry is 0, and the barrier to success is very, very high. As you're learning, trying to build an audience with your podcast. And one of the things about a Substack is it's until very recently, and even still, not necessarily a place where people start. They might end up there. So you have to find them somewhere else and pull them along your customer journey, and then they end up on Substack. And when we analyze people's content creation businesses, we used to do this professionally in our consulting firm, and now we sort of just do it for free and help other people occasionally. The biggest failure mode is like too big of a jump. You know, you're trying to go from an impression to an email, and that's like a bridge too far, and or it's too hard to go from an impression to an engagement to an email. There's a bottleneck somewhere. And so as long as you sort of have that customer journey mapped out and you make it very easy for people to slide down that sluice box, you can create a business. And so we spent a lot of time creating a business on creating a following on Twitter in the early days, much less so today for a variety of reasons. And then I would say, like, in that journey, a very, very strong, perhaps the strongest engagement we can think of is somebody listening to a podcast. You know, like that's why we go on, you know, any polite podcast that will ask us. Because your listeners listening to this now is a very high quality engagement. Now, some might be turned off, but there'll be some that think, hey, you know, I enjoyed that conversation. I want to get more. Let me go sign up for the previews. And so we would go from an engagement, i.e. listening, to heading over to doomberg.substack.com and then chipping your email in and then getting the free previews to all of our pieces. Then maybe you read 5 to 6 of our previews and you said, wow, you know, I really want to read this article. I'll go ahead and subscribe monthly. And then you read a few of the other articles once you're behind the paywall, and then the next ones come out. Say, you know what, I'm going to renew, or I'm going to upgrade to annual, or I'm going to upgrade to pro. That's the customer journey. And the real objective is you have to delight your ideal clients. And so you have to find them, you have to entice them, and you have to delight them. And that's basically every content creator's mission. And the rules are pretty universal: impression to engagement to email to paid. And one of the things we've learned about social media is there are no true vertically integrated content creator ecosystems unless you're willing to submit yourself to an ads-driven model like YouTube, where the algorithm decides that you're behaving correctly and they will feed you. So, you know, you kind of have to be on multiple platforms. And maybe you start on LinkedIn and pull people to your Substack, or you start on Twitter and pull people to your YouTube. Most people don't start on YouTube and find you unless the algorithm loves you. They'll see something you've said on Twitter and say, I want more of Luke. And then they'll follow you on Twitter and they might engage with a few of your tweets. And then they'll come over to your, you know, YouTube channel if you, or wherever you want to put your podcast, and they might subscribe. And then ideally they might, you know, leave a review or something like that. And so engage in the comments. This is the customer journey.
Great tips, great advice there. I really appreciated that. And great analogy there to gold. My dad was actually a gold panner, so I got a little bit of experience with the gold sleuth box. Great analogy.
Yeah, you know, your dad would say, you know, more dirt, more money.
That's it.
But also he would say, you want to dig where the gold is, right? And so we had 2 objectives when we started Doomberg early on. We shall be a must-follow FinTwit account, and the way you do that is you produce good original content that is optimized for the Twitter algorithm. And then we will be the world's best podcast guest. You know, we will be prepared for every show. We'll be professional. We'll put it through our own Twitter. You know, we treat every podcast appearance, whether they have 50 subscribers or 500,000 subscribers, and we've been on podcasts with the full range, the exact same way. We treat every podcast appearance like our business depends on it, because it does. And so professional, on time, polite, willing to engage, have a high quality conversation like you and I just had here. And you just keep doing that over and over. You know, wake up, make the number go up, and repeat. That's another one of our favorite mottos around here.
I love it.
We stole number go up from the Bitcoin crew. So you know.
Good on you. Good on you. And obviously, like, I've really enjoyed the discussion today. I know we have opposing views on Bitcoin, but you've, as you do with all of the other podcasts, you always display great professionalism. So I'd love to thank you for that, Doomberg. And maybe final question. You're an anonymous person online. I haven't heard you answer this one anywhere before. Are you worried potentially that there could be a day where central planners around the world are going to try and KYC everybody on the internet? And if that day hypothetically ever comes, what do you think are some good plan Bs? Obviously, there's protocols like Nostr that are popping up in the Bitcoin space that are completely decentralized and operate on the Bitcoin Lightning Network. So obviously you could transfer your audience over there, or what do you think about those kind of 2 questions there I posed to you?
I mean, we're anonymous predominantly for brand. And if the world, you know, by the way, I mean, it's not like Substack doesn't know who we are. We flew out and met with the CEO and had dinner, and we're fully KYC ML, you know, with our payment processor Stripe, and we bank at a local community bank. And before we launched Doomberg, we did a full business plan review with the vice president of private banking, and they knew the timing and nature and source of all of the incoming cash that we would get from our new subscription business, which was a physical adjudication of her, KYC, AML duties, which is the very best way to do it. And in a world where we had to submit to the CBDC slash, iScan to get on the internet, and everybody wouldn't know who we were, we would just be ourselves. We're not ashamed of ourselves. And it's predominantly brand. When you're anonymous and you build a character like we have with Doomberg, we have observed that when you de-anonymize, you destroy a big chunk of the brand mystique. And so we only preserve it for that. And there are hundreds of people on Wall Street who know who we are. It's not some big secret. And so, yeah, in a world where you had to be, a Doomberg, the person, me, and the rest of the team, then we would just de-anonymize it, and we would still be the character, but the government, they already know who we are anyway. I mean, we're going to be filing our taxes and paying more than our fair share. Thankfully, I don't view paying taxes as anything other than a sign of success. And so, yeah, it'd be no big deal for us. And we wouldn't have to port our customers anywhere. We would just be ourselves.
Doomberg, thank you so much for spending the time talking to me today. It was an absolute blast to talk to you online and ask you all sorts of different questions. I would encourage the listener to definitely sign up to your Substack. It's one of the few that I pay for. I pay for Lynn Alden's work. I also pay for Luke Groman's work and yourselves. So I'd like to congratulate you with all the success you've had. And do you have any final comments or thoughts that you'd like to leave the listeners with today, and let them know where they can find you online?
Yes, first of all, huge fans of both Luke and Lynn. And if they have to choose between two, they should choose those two because they're super high quality people, and we're big fans of theirs, and we pay obviously for their work as well. And but if people are interested in finding out more, they could sample some of our previews for free at doomberg.substack.com. And in fact, on our About page, we have a whole series of articles we posted before we went behind the paywall that are completely free, so you can get a sense of our work. And if you do sign up with your email, you get about the first third of our pieces are free, and we try to entice you to come over the line and read the rest of it. The cut to paid line is something we think about very carefully as we construct these pieces. How do you entice people the most and get them over the line? It's a fun intellectual exercise. But I really appreciate it, Luke. You're a real pro, and I see a very bright future for you in the show and whatever content creation endeavors that you engage in, and I really appreciated the conversation.
Thank you so much for your time, Doomberg. I appreciate the kind words. See you later, everybody.
So that is my interview with the one and the only Doomberg. Before we round this thing out, I want to leave you all with one very important takeaway and consideration that Doomberg and myself didn't quite have the time to look into today. Okay, we agree CBDCs are coming, but if they do eventually arrive, I believe there's a lot more you can do to escape the Orwellian madness, and that would be find yourself a citadel. So recently, I documented my journey of how I moved to El Salvador for 365 days to try to live on a Bitcoin standard and obviously try to escape the ridiculous measures that many Western countries try to put you through. If you want to learn a little bit more about what it's really like in El Salvador, recommend you check out the video right here. And with all that said, I'll see you all in the next video.